Welcome back to the Group Practice Accelerator podcast, brought to you by Polaris Healthcare Partners, where we leverage decades of healthcare and business experience to drive growth in successful group practices just like yours. If you're a healthcare entrepreneur and you're interested in building, scaling, or exiting your group practice, you've found not only the industry's leading resource for business education, but a team of trusted advisors dedicated to helping you achieve and exceed your goals. In short, the team at Polaris creates clarity, confidence, and results. I'm your host, Jamie Falash, and the Group Practice Accelerator podcast is on the air. Well, hey everyone, thanks for tuning in to this week's episode because I've got a full house with me here today. So rather than go into my sometimes long-winded intros setting up today's topic, I'm going to keep it brief because we have a great episode planned as a team. And we're going to take a look back at 2025, what we learned, what really paid off for the owners, practices, and businesses that we support. And looking ahead, we'll be sharing what we see in terms of trends and the market for 2026, because we know that you need to take action in order to see the outcomes that you'd like to see for the coming year. So with that, I'd like to welcome Diwakar Sinha, Polaris founder and CEO, Aidan Bradley, our fractional COO and strategic consulting executive, and Mark Flack, our partnership and equity solutions executive. Hey guys, thanks for joining me.
Hey, Jamie.
Hey, Jamie, thanks for
Good.
having us.
Yep,
Yeah,
glad to
good
be
to see
back.
you all. So you ready to wrap up the year?
Yeah,
Come on,
Sure.
let's
the
not
holidays.
resounding yes.
Yeah, looking forward to the holidays.
Yeah. Keep them busy.
Well, yeah, exactly. Well, thanks for jumping on with me today. You know, for each of you separately, what were some of the trends that you saw in terms of timing when working with clients this year? You know, they kind of get to a certain point where they need our support or the service that you each provide specifically. What did you see personally this year when working with clients in terms of when they were ready? Like, what were some of the catalysts that drove that?
Yeah, I'll jump in.
Okay.
One thing I noticed is, compared to prior years, at least, on the partnership side of things, is I had a lot of doctors come to me, probably more so at the 10th or 11th hour, and versus reaching out proactively, saying, "Hey, I've already promised this, or I need to do this, and I've already gone this route," and having to kind of spin the wheels really quick. To get
Yeah.
things done. And unfortunately, in that situation, clients might be limited in what they can offer because of what has already been promised or said, or just late to the game in the
Mm.
process, versus reaching out to me more proactively where everything's on the table. And I think that was one thing I noticed, especially in the latter half of this year. That's something just to kind of let the audience know, if you're considering a partnership solution or considering anything along those lines, like reach out well in advance. It'll be to your advantage, and it'd be more of a service to you because you have options that I can talk you through. So that was just one thing I've noticed from a timing perspective since you mentioned that, Jamie. Yeah.
Mark, do you mean from a sort of a setup perspective, like they want to offer equity solutions down the road, but they're not quite set up the right way?
It's more so, hey, I told a doctor that I would offer this by the end of the year, and they're reaching out to me in October, November, or even September. Whereas if you're going to have that coming up, or you're considering things, and say in 2026, reach out to me in summer of 2025. Like reach out to
Yeah.
me 6 to 12 months in advance, because
Oh.
there's a lot of things I can do. And there's a lot of options that we can plan for and do it the right way, versus kind of waiting to the last minute and having two options. There's A and B versus A through Z if you come to me well in advance. Yeah.
Got it. All right, that makes sense. Aidan, how about you?
I noticed two trends as I thought about this. One, and I mentioned this to DeWalker, I found that with groups or owners that we're talking to, they are more committed to beginning more quickly. There's less, kind of kicking the tires, for lack of a better word, and more of like, I need help now. And I think, a lot of them have hit that inflection point and are calling. And then the second part is, we talk a lot about the three pillars that we really focus on with people, process, and patient flow. And I think a lot of the groups that we're working with have had a heavy emphasis on the people part, like right people, right seats, and they're finding how it's impacting the rest of their business. So a lot of the work that we're doing is really helping develop the team while developing processes and trying to identify, where that disconnect is. So I've seen a lot more of that this year than I have lately. And I think it just proves what we've been saying for a long time, is that, all of those issues fit into one of those three buckets. And the one that has probably been the least attended to is now the one that's, becoming the most visible.
Yeah.
and be as being a problem. So
That makes sense. Well, I'm curious though about those inflection points. What were some of those that caused people to call you?
yeah, I think a lot of it is just being really stagnant. I think, especially, in this economy, there was some, especially with higher end dentistry, there was less case acceptance going on. I think we could easily track that. We had to really button it up as the market consolidates and dentistry as an industry becomes more commoditized. What is the value proposition that we offer as owners to attract people to us, whether through new patient flow, retaining employees, and then also through our processes being more efficient. And I think what we saw was margins being eroded, or worse, it was costing more than a dollar to generate a dollar's worth of revenue. And that was, I think, an inflection point for someone that says, wow, revenue went up 10%, but I went backwards in profitability. How is that even possible? So that's a big one, continues to be one, but we work through those.
Yeah, for sure. DeWalker, how about you?
Yeah, great question. I think as the year evolved, right? So the engagement process probably fluctuated, and early in the year, probably a reflection of 2024 conditions as people are evolving as far as how the market conditions were. We were just coming out, the tariffs were being impacted to how people are reacting to that, and there's probably a little bit of shock. And I think even some of our podcasts, we were addressing how to be ahead of that change, how to not, react to that process, to that. And then over the summer, I think people are starting to settle into realizing that, the tariffs are not going to be as impactful to it. And to validate some of the things that Aiden just said, some of the consumer spending might have slowed down in the higher end dentistry going into Q2, Q3. So I think, depending on, the service offerings we had, some cycles were sooner versus later, but most people were starting to act upon and say, you know what, I need to be ahead of this process, versus react to it. The other aspects that I think were macroeconomic conditions, and I do believe around the summer we started to see a little more fluidity from the market as far as engaging us probably more rapidly. And I think, Mark probably saw that and addressed it like probably more, let's say reactive, but also people started to say, okay, I need to move forward on these changes because people started to see revenue go up, and momentum happen. Cost of capital started to move down. We talked about that early in the year, that, prime indexes will go down. We saw SOFR indexes start to move forward throughout the year. So I do think, towards the end of the year, people started to move forward, with the decisions for their businesses a lot faster as they start to get comfortable and say, hey, the tariff conditions are what they are. I do need to move forward with my business at some point. These things will solve itself. M&A activity started to pick up around Q2, Q3. Partnership strategies, as Mark said, started to pick up, say, hey, we need to solve these issues for our doctors. Growth strategies focusing on M&A activity and what people need to be doing in 2026 and 2027. People started to look at their operational inefficiencies, started to work on with the fractional CO services. Partnership strategies revolving around M&A activity of offering doctors that are going to be key anchor doctors for their practices. These are doctors that have been very impactful in the success of these practices, to allow for legacy of these practices. Those, instead of being reactionary, we're starting to get those calls. The deals are going to happen in 26 and 27. Those are the kind of calls we're starting to get in Q3, Q4. So I do think Q2, Q3, we started to get a little higher activity versus Q1. Will probably more stagnant coming in a lot of the reaction from the tariffs versus coming into Q3, Q4, a little more forward thinking.
Yeah, and I want to stay with you for a second here because I was just going to ask you what you felt fell flat, but I think that maybe stagnant's a better word. And do you feel that part of that is due to maybe a lack of understanding of the market behavior? You did a great job on like a handful of our podcasts with your crystal ball and actually predicting what was going to happen. So I'll have to list those in the show notes so people can go back and listen. And we have an upcoming episode where you're going to be getting into like the state of the economy and what that looks like for 2026. But do you think that there was a little bit of that stagnation that came from a lack of understanding of what the market was doing this year? And do you think that that's going to improve for 2026? I know that's a broad question on that end.
Yeah, I mean, I think, our goal in the podcast is to educate, people about, how to receive information that they're getting in the market, right? To the best of our ability, right? We can provide guidance. It's like, okay, here's what's happening potentially and how to process that information and be ahead of change, right? Not to react to change. I think if we go back to 2024, 23, we've always said you got to make decisions 6 to 9 months out and not be reacting to change. I think, we kind of go back to tariff changes and all these changes that are happening in the market. I think a lot of those things were reactionary, and when you react, sometimes you freeze and you're almost not being able to move at the pace of change. You need to be ahead at the pace of change. And I think that's probably what happened to a lot of people in the market. We saw data from the ADA come out of income streams from private practice owners start to decline, revenue start to decline. And I think a lot of it was due to people reacting to the market, versus saying, okay, if we see tariff issues are going to happen, our consumer spending is going to be going in this direction, how can I be positioning myself if I see these changes happen to be positioning my practice, my business as a leading provider of healthcare in the market? Like, so what can I be doing different, right? And I think those
Exactly.
are the things that we were trying to communicate back in February, March to May, June to help the clients that Aiden's working with, Mark was working with, to be leading of change versus reacting to change. So I think in our podcast moving forward, in all the communication for M&A strategies, fractional COO, partnership strategies, everything's about leading and being ahead of the market than reacting to the market. I think that theme's not going to change going into 2026.
No, and you don't want to be reactionary and scrambling to keep up with what the market fluctuates. You're on the right track there with some things I was going to get to with Aiden and Mark too, in terms of what they saw with their clients. Mark, I'll start with you again. What were some of those positive outcomes that you saw with your clients that were leading?
Yeah, I had many successful partnership solutions that we created in 2025. So it was a blessing to kind of see all of those come in and see all the positive outcomes for the doctor partners that are brought in. I did see an uptick with strategic buy-in solutions compared to years in the past, which was interesting. There's a doctor that's interested in more of a buy-in and actually taking on a loan to do so, just because student loan debt's increasing. So we've actually kind of seen typically the the I guess line going downwards with respect to that. So it's not as often. But as you know, we're agnostic when it comes to the type of partnership. It's just the right solution that makes sense for what you're looking for and what your future partners are considering. I had a lot of clients that had substantial growth year over year. As we completed their cap tables that had earned equity models. So it was really great to see their doctors, well exceed their expectations year over year, which allowed the business and the principal partner or partners to exceed their revenue expectations for the year. So, doctors blew it out of the water. Principal owners were extremely happy. It was truly a win-win for both sides. And then I also had as a recent podcast earlier this month that we had with Dr. Benjamin Tolley that had a partnership dilemma that was just kind of unsure on how to execute it properly. So it kind of went through the process with two doctor buy-ins that were interested in partnership and just kind of going through the process. It was very strategic to them and providing what the doctors were looking for, but also what he was able to consider and also looking out 3 to 5 years, what makes the most sense for the business and all three parties involved. So it was a lot of little nuances that we went through, but that's part of what I do and why I'm here. And that's what I enjoy is getting to the right solution for what they're looking for, and had a lot of those. So a lot of buy-ins in 2025 was kind of what I saw, and a lot of positive outcomes for those partners.
Good to hear it. Aiden, same question to you. Those positive outcomes for people that tended to be wanting to lead the pack rather than be more reactionary.
Yeah, when I thought about this question, I think I'll start by saying what makes Polaris unique is that we talk about how we tailor make our strategies to fit the client's needs. And as I think about all of them, while there's some common denominators, a lot of them were uniquely different. But one thing that was pretty consistent is that we reduced stress on them because they told us what their stressors were. So if it was cash flow, if it was revenue, if it was debt, we were able to help them solve for what they did. I have one, I worked with one client who had offices in both in the New Hampshire area and down in Ohio. So, obviously not contiguous to one another. And we increased revenue quite a bit, but where we really helped him was turning over some docks and then alleviating the need for him to travel back and forth, which was creating a lot of stress while generating more revenue. So he felt the effects of the bottom in top line. Some of these folks I've talked about on our podcast. We have someone in the plastic surgery vertical that bottomed out in 24. In 25, we had about a 28% increase in revenue with very little increases in spend. I literally just got done reviewing their VTO. So for those EOS disciples out there, we looked at their vision and traction we're looking at about when we execute it by the end of 2026, we'll see about a 40% increase in revenue. And then one other thing to kind of touch on with what DeWalker was saying is that I've got some folks that I'm working with now that are already planning an exit and saying, I need help optimizing my business. So we are engaged with the intent to bring them to market, knowing that they've got to button some things up over the next 6 or 12 months before we're ready to take them. And, we as collaboratively are working together, and often Mark will come in because we need an equity solution before we do. Our data and analytics team will need to come in and help value the business. The Walker's involved because obviously he knows the market. He knows how to understand the readiness of them, if you will. So I'm seeing a lot more of that activity. And what's nice is people are sort of understanding that we're not just a consulting and fractional COO and equity solutions group. We help package you to be ready to monetize your life's work. And I think the podcasts are starting to resonate because people are getting ahead of that now. So as we see docs or partnerships starting to say, hey, we're not either fully aligned or we have different end goals, it's time to start strategizing about how we monetize this. We've been doing quite a bit of that lately, and I like it because last year we had a very successful consult to sale transaction where we showed probably about a 20 to 25% upside in value from the beginning to the end of that journey, and they are very happy with the outcomes. We stay in touch with them. I think to me is really, really exciting because there's actually an end goal in place. It's not just come in, put the fires out, and we'll see you guys later. It is truly an end goal to the journey, and getting them to monetize their life's work, if you will, is, brings a special purpose to all of us because they're trusting that to the entire Polaris team.
Yeah, well, it's not a one size fits all, as we talk about quite a bit. And I think we all appreciate what the three of you can deploy for a group practice, depending on what their needs are. And that might not be evident right up front. So I think it's good to consider all avenues. DeWalker, same question to you, but I want to shift gears and ask you about discovery days. We don't talk about that enough, I think, on this show. And I think it's something that our listeners probably want to hear a little bit more about. Can you explain that a little bit? And then some of the experiences or outcomes that you saw from our discovery days in 2025?
Yeah. So we have people come for two different types of discovery days. One, people come in and say, I'm thinking of going to market. What does that look like for me? Can you just walk me through, help me understand where my business is today? And should I take my business to market, right? And what would that journey look like? So that's our discovery day for potentially taking people to market. And we help evaluate. We'll do a quick analysis of their business, help understand the opportunity, help them run through what a sell side process would look like, and help them understand what that looks like. The other part of the business is people come in and say, I'm thinking of building a group. I think I have, loose term would be a DSO. And, what does that journey look like if I think about building a DSO? And that's the other side of it, and people are exploring, should I set up a DSO structure? Should I evaluate building a partnership structure? What does that journey look like at 3 locations, 5 locations, 15 locations? And, what kind of leadership team do I need? And what is my journey going to look like? And we walk them through that. What is that going to look like? And what does it mean for them of building that process, building the executive team, the amount of debt they're going to take on board. And the goal for us is to educate for them and make sure that that is something they want to do. And majority of people that go out of that experience are really excited about the journey they're about to take on board. And some people say, hey, this is not for me. And either way, the outcome for them is that they came out of that experience saying, I'm glad I came to this because it allowed me to have clarity that, what is and isn't. Do I want this journey or do I not want this journey? And that is our end goal at a Discovery Day, is to make sure that they have better clarity, number one, into high level, into what they're building today or what they have today, because we do a basic analysis of their business when they come to Discovery Day. Two, what is the journey going to look like for them? Should they build a group or should they go to sell side process? And do they want it? We're trying to answer those questions for them, so help provide better insight and clarity into what that next 6 months, 12 months, or 5 years is going to be, and if they want to move forward with it, make sure that they're committed to that process. So I think most people coming out of it are really excited about the direction they come out of it, and then they're able to move forward with that direction.
Well, and like we know, building a group practice is not for everyone. And you have to know what you're getting yourself into.
Yep.
So, yeah, that can be an enlightening day, I'm sure. And this question's for everyone. And Diwakar, we can start with you. If I am going to grow my business or think about building a platform, what are a couple of my non-negotiables? What do you think those should be?
Yeah, I mean, I think if you're thinking of building a group practice, kind of put yourself and say, what am I trying to build and the why? Kind of figure out your mission and your purpose, right? And I think a lot of people try to build a group just to build a group because it's about wealth and income. And I think those entrepreneurs that go with that route, I think within 2 years or 3 years, the stress or all those challenges that come with it quickly diffuse that process, and they end up exiting that process at like maybe location 2 or 3 or 4, right? So if you're thinking of building a group, really identify your why, and what is the purpose of the business which you're building, and map out the 3, 5 year, and 10-year plan, and think about what kind of care you want to provide. Are you going to build partnerships into your strategy? And there's nothing wrong with it. The answer is no. Okay. Just have to plan out what does that look like for yourself. And are you okay with the amount of debt you potentially might take on? Again, some people don't take on debt. If they're going to build multiple practices, they have a different model to build out with more equity into the business. There's nothing wrong with it. Just kind of figure out your process a little bit to what that's going to look like. Again, figure out your why. That's really the more non-negotiable. If you're just focusing more on, the economic portion of it, I think that starts to diffuse itself out fairly quickly within 12, 24 months.
Yeah, definitely.
Yeah.
Definitely. Mark, what about from your perspective?
Yeah, I'll kind of echo what Diwakar said because it was going to be kind of along the same lines. And he kind of hinted upon partnership. Depending on how you look to exit, how smooth you want that transition to be based on the size that you are, partnership, it's not necessarily a non-negotiable, but something you definitely need to consider. Now, is it right for you? You need to understand why you're looking to do it. And then that's kind of what to Dwakar's point. If you're just looking to do it just because, then it might not make sense. If it's doing it for financial purposes, it might not make sense. And that's where just speaking with someone from a third party lens that has no vested interest financially in the situation makes a ton of sense to have that conversation, walk through the if then this type of scenarios with respect to partnership. So you fully understand what this all entails, because if you think you're you could absolutely build a $30 million business and not have any partners, but is it going to be easy? No, it's going to be rough. It's going to be tough, along the way. And especially if you're looking to exit, from a transition perspective, it's not going to be very smooth for your buyer without having partnership considerations for at least some of your key providers and your key doctors that are working in there, leading different locations and things like that. So it's definitely something I think you absolutely need to consider, but I'm not saying you have to offer it. It may not make sense for you and your plan and your vision long term, but it's worth having a conversation with people and your peers and I would say consultants like we are and advisors that understand that space, so you know what it entails and you can plan accordingly for the journey ahead.
Yeah, good point. Aiden, how about you?
I think for me, to echo what they had said, are really getting our clients to trust in our process, understand their needs, listen to them, and then just succinctly provide solutions to what they say their problems are, which is what we have been doing successfully. But for me, I'm starting to see a trend to echo what DeWalker and Mark both said, and how we not only work collaboratively, but I think as people listen, whether to our podcasts or others, they're starting to understand what they didn't know. Like they always say, we don't know what we don't know. So from there, I think we're better positioned to help those that are coming to us now.
Yeah, agree. And DeWalker, what would some of your non-negotiables be if you're thinking of selling in 2026?
Yeah, I think if you're thinking of exiting in 2026, what beyond that, I think people try to identify the easy ones are economic indicators, right? Like, okay, here's a valuation I need. I think most people can define that to some level. If not, we're happy to kind of have a conversation with them, do an economic waterfall and, guide them through that. I think for us, that's fairly easy to help them guide through that. We can, work with their CPA to do a basis on their tax structure and say, okay, this is where you would potentially net out. But I think the main non-negotiables I would be looking at is, okay, what is the culture you've built? What's the clinical philosophy you've built? And what is the journey you're looking for in a post-transaction, right? Let's help you define that if you haven't defined it, and let's work towards that. In our previous podcast early in the year, we talked about the structure of the deal, beyond valuation. So the non-negotiables would be, if you're looking for a 3-year, 5-year post-transaction, let's define what that looks like and make sure that's a win for you and the win for the partner. That's one, because it has to be a win-win for both sides. Two,
Right.
The other non-negotiable would be, let's make sure you're ready for a partner.
Yeah.
I think, a lot of people kind of start a process or think about a process, and they may not be ready for a partner. So I think it's also important to think about that. That being said, I think people need to kind of start looking at, 2026 is a really good time frame for M&A conditions. We've been talking about that since early 2025. All market conditions are indicating that, the cost of capital has been going down for the last year and should be, meaningfully improving in 2026. And in our conversations with all the strategics and sponsors, that they are actively looking for the right opportunity in 2026. So I think if you are thinking of evaluating a partner or are open to a partner, now is the time. I would say that these conditions are starting to look like where the conditions were 3 to 4 years ago. And so I think if you are looking at that timing is really optimal going into 2026. But the non-negotiable being, let's make sure we help you understand what a partner looks like, and that we can help you identify what that structure looks like, so you are in a good position to make sure that it's a win-win for both sides.
Yeah, absolutely. And like I mentioned before, tune in for our first podcast of the new year. DeWalker and I are going to talk about market conditions, what that's looking like for the new year, and all of 2026. But we have a really full Q1 of 2026. We have 4 conferences that we're either hosting or going to be speaking at, or both. So DeWalker, Mark, and Aiden, all 3 of you are speaking at our January masterclass. That is January 14th through 16th. And that's our more clinical development focused masterclass. But I'm kind of excited for each of your parts in this, because Dr. Vivek Solanki is going to be talking about clinical development, everything from starting off smart to case acceptance, leveling up patient care, getting your associates up to 5K a day or more, depending on where they are in their development. But each of you have a separate part, and Aiden's going to be talking about fine-tuning operations to kind of match that clinical development. And Aiden, can you tell us a little bit more about your part in that? And then Mark is going to be talking about partnership strategies. So if each of you want to take a minute to talk about your part in the masterclass, and then we'll talk about a couple other shows we're going to be at.
Yeah, and in there, I'm going to share some of my non-negotiables too, because it's it's in person, and I think you teed that up well, because this is not a podcast event or a video event. It's in person. So, for any of our listeners that have an opportunity to come, I think that not only will they get a unique opportunity to hear us speak, and I'm going to answer your question, but also they're going to be able to, like you and I spoke about, Jamie, when we were preparing for this. This is also a really unique opportunity for other practice owners to mingle with other practice owners.
Yeah.
and share some of that. We're going to be going through in my sections. Dr. Evek is going to be talking a lot about clinical coaching, clinical mentoring on day one. And then in the early morning of day two, we're going to talk about really how to set up the foundation of the organization and how that foundation from the very beginning is what's going to allow you to grow efficiently. It's going to minimize mistakes. It's going to allow you to grow and add on practices, multiple or de novos more seamlessly, take a lot of the dead time out of that equation. And, I've said this countless times on our podcast. It is way more difficult to unwind this at 4, 5, 6 practices than it is from the very beginning. So one of the things we really want to focus on is that foundation from the very beginning. The platforms you use, the people you hire, the processes you put in place, the culture that you build is going to be your North Star on how that entire group practice comes together. And if there is one thing that I have seen is that a lot of these groups, as they grow, become, someone used this saying to me yesterday. I thought it was funny. You've seen one practice, you've seen one practice. They become common ownership type practices where, they're not really centralized. So we're going to focus heavily on the foundation, centralized services, optimizing your practices, right people, right seats, really building that from the ground up and then building out. So as you grow, you should become more profitable, where a lot of times we see as they grow, they become less profitable because they haven't done these things. So there's going to be a heavy emphasis on that and a heavy emphasis on a Q&A section of that too.
Yeah. Well said. Mark, how about your portion on partnerships?
Yeah, that was a little more than a minute, Aiden, but I'll try to keep the 20 seconds to fill in the difference. No, it's looking at it from an associate's lens. Does it make sense for them? Or doctor's lens? Does it make sense for them? Does it make sense for you to offer it to them, type of thing? And then it's also going from stages 1 all the way to 10. I would say if there's a 10-stage step, or going through the process of before you even hire someone, you're going through the interviewing process. What are you looking for? What types of conversations are you having to, okay, now they're onboarding with you day 1, week 1. What does that look like? And then, okay, now they're at a point where I want to offer them partnership. What are some questions I need to ask them? What some questions should I be asking myself? And then what type of solution makes sense? So kind of go through a lot of those things, Jamie, and just leave it at that. Yeah.
That'll be a great presentation. DeWalker,
Oh,
words
is
on
this?
masterclass?
Yeah, I mean, I think on the master's class, I mean, I think our goal is to, obviously in the clinical coaching side, Vivek's going to focus on leadership of where the doctors need to be and where we want to evolve with those doctors. But, where also connects with the operational connection of what Aiden's talking about, where partnership connects as these doctors develop, with their clinical development, and then how all of this results in the practice performance improvement, right? Our entire goal is to do a few things, for the business. One is that there's better access to care in the communities these practices serve. To allow those associate doctors to have better income stream. So number one, better access to care in the markets they serve. 2, those associate doctors to have better income. We've seen all the data coming across from the ADA and different dental associations that student loan education is getting more and more expensive. The federal government's provided less consideration moving forward of what student loan debt's going to be covered for doctors coming out, right? So which is fine. It is what it is, right? So more income from clinical procedures is how we can kind of augment some of those things coming out of it. So better access to care, more income for the associates coming out. And then that results also in more revenue for the practices, right? And that allows for private practice ownership. Again, we saw data coming out from different dental associations. The private practice ownership revenue has been going down slowly. So this helps offset and combat some of those things. So for the doctor-owned DSOs, we can help offset these things by providing better education for doctors, help grow their associate income from $600,000, $800,000, $1 million to $1.5 million over the next year to 2 years, and help create better profitable practices. Effectively, if these DSOs, emerging DSOs that are doctor-owned DSOs, can help build that, and we create partnership strategies, align operational teams to better support that. This is a win-win across the platform, and that's really the purpose of those 2 days.
Yeah, and this is, as I mentioned, this is an in-person event. It's in Charlotte, super easy to get to. I'll make sure I link to that. And all of these are on our events page on the website, by the way. So come and see everyone speak in person and see our smiling faces. So next up, CareStack Inner Circle, January 29th through 31st. DeWalker's going to be speaking, and his session is called A New Path Forward, Choosing Purposeful Growth Over Chasing Scale. Pretty self-explanatory, but like you said before, people start building without the great foundation. It's not going to work. So words on your session there before we move on to our next event.
Yeah. So I mean, I think the theme, obviously beyond the title, is that we want people to have responsible growth, responsible scale, right? I think people think about growing, and obviously people are thinking about, hey, if we don't grow, there's economic compression. I just talked about that happening. So people sometimes tend to chase revenue by acquisitions or de novo. And people are taking on debt, and when you're doing that, you're not thinking about how that impacts you. And we've seen different people in the market that they might have 3 locations, 10 locations, 25 locations, and sometimes the equity is just not there in those businesses. And you see these great operators, and I say great operators because these are people that really started off with good businesses, and they started chasing growth, and then the debt offset them, and caught up to them. So we want to be responsible about that. And if we just slow down and are responsible about it and really understand what building good equity means, good wealth means, then I think they can build really good businesses. And that's what this presentation is going to be about at the Inner Circle event, is how do you responsibly grow at 5 locations, 15 locations, 25 locations? What does building equity means? How do you do that in a de novo strategy and an acquisition strategy, and really have a good productive outcome through those both processes?
All right. And then moving on to AADGP, February 4th through 6th. DeWalker's speaking twice, and he's going to be speaking for a while. So it's actually a couple of sections. His first one is a 3-hour mini session. There are only 3 options for attendees, and the exhibit floor is not open during this time. So the 3-hour mini session is called Clinician to CEO, Your Roadmap to Leadership, Freedom, and Rising to the Top. And then the next morning, he's going to have a breakout session that's kind of like that Shark Tank style, which can be kind of fun. And that one is called Scaling Smarter, Crafting Business Plans that Drive Maximum Value. I'm going to start with the Shark Tank style presentation because those are fun, and I'd like to be involved in that one. Can you tell our audience and whoever's attending AADGP what they can expect?
Yeah, so we're excited about the AADGP event, the business plan Shark Tank event. We're going to make it really interactive for the people that attend that event. And the goal there is to have people, help create a collaborative business plan on site. So we're not going to be creating business plans in advance. We're going to get the audience members to interact with each other and create a business plan on site there. Right. We're going to have questions that we're going to have that are going to be how they're going to create, with those questions, so there might be on the table a pediatric dentist, a general dentist, an oral surgeon. So, whoever's attending, in that event, and we're going to work to create a business plan together. And then we're going to present, each table is going to present a business plan. And then we're going to rate the business plans and kind of dissect the business plan together. So it's going to be really interactive. We're going to have prizes there. So we're going to make this, really interactive between the group that's there. And the goal there is for people to kind of think on their feet and help, work with each other and really understand how different business plans can be unique and be fun, and again, collaborate together, so, each specialty can learn from each other and the challenges of each other's specialties. And again, should be really a lot of fun on that day.
Yeah, definitely. And attendees are going to want to come prepared for this one. All right. So moving on to the final event that we have for the first quarter of the year. March 25th through 27th, we are co-hosting an event with Midmark Corporation, and that one's called Multi-Site Mastery, Designing Growth with Confidence. So this is really for the emerging group that is ready to build either through acquisition or de novo, and use design to really make those locations that you're adding work, not as singular locations, but everything works together. So it's a seamless, operationally sound production at the end of the day. So DeWalker, I'm going to have you kind of kick off with some of the things you're going to be talking about. We have 2 full days of speakers, including from Polaris and from Midmark and some of their team as well. So kick us off with your words on the event and some of the things that you're going to be talking about.
Yeah, so the goal here is, kind of, going into more the detailed tactical aspect of building a group practice, people that are focused on de novo strategies, focused on potentially looking at acquisitions, and going into like, how do we do it, the tactical aspect of it. What does building a de novo look like? Design, obviously, we're at the Midmark facility. What does designing an office look like? We're going to have an attorney there. They're going to talk about, what does an operating agreement look like? And again, we're not going to go through paragraph by paragraph. I don't doubt people want to go through 26 or 60 pages of an operating agreement. But again, really dissecting when we're setting up, legal structures, what should we be thinking about? And again, that's going to align a little bit when Mark speaks at the event on what partnership strategies may look like on setting up de novos or acquisitions at different locations. What does building equity mean when we're setting up a de novo practice? And again, at the inner circle, we might have 45 minutes to talk about this. At the Midmark event, we're going to break this thing down over 2.5 days or 2+ days and really make this an intimate event where we go 45 minutes, an hour at a time and break each component down. And this is really set up for people that are looking at the next 3 to 5 years and saying, I'm in growth mode. I want to build a business. Yes, I might transact in 2020 at 2030. I'm still, in growth mode. And I want to see what the tactical aspect of growth looks like.
Yeah, it should be a great event with Midmark, and I know I'm excited about that one. We've got a full slate for Q1 of the year, so make sure you go check out those events. You can go to our website, and we now have an events page there where you can check out each event. You can register for them right from that page as well. So go take a look at those. And I'm looking forward to 2026. I don't know about you guys.
It's exciting. Yeah, very excited. I'm also excited to see some people at our event in January, but also at the Inner Circle event. I remember last year we saw a lot of current groups and groups we work with in the past. It's a great event. So if I get a chance to see you out there, looking forward to it. And let me be the first to wish everyone a happy and joyous holiday season from all of us to all of our listeners, and obviously to all of our team members here, to each other. Hope that DeWalker, Mark, Jamie, you all have a great holiday season and get a chance to unplug and get ready for Q1.
That's right. We'll hit the ground running. Thanks, Aiden.
Everyone, Happy New Year.
Yeah, DeWalker, Mark, Aiden, always good to have you all, the whole team on the show, or at least part of the team. Looking forward to an exciting 2026. And to our listeners, as always, if you want to connect with us, send us questions, suggestions for topics that you want to hear about, just drop us an email to info@polarishealthcarepartners.com, or you can reach us by visiting our website at polarishealthcarepartners.com. Thanks so much for being a loyal listener and subscriber. If you enjoyed today's episode, please share it with a colleague or friend, and be sure to leave us a rating on any of your favorite podcast platforms. We'll see you on the next episode of the Group Practice Accelerator Podcast.